It's about that time of day again. My name is Joseph. It's Tuesday evening, January 3rd, 2017. This is your nightly newsletter. We're covering crude, S&P, gold, euro, and FDAX this evening. Crude is bearish, but sellers need to stay patient for a correction higher, or they need to see continued strength to keep selling lower tomorrow. We might be back at that $50 a barrel by week's end. Even the S&P is range bound and trying to rotate back to the highs of today's range. Gold is range bound, and sellers are trying to sell the highs of the range right now. Get a great failure opportunity setting up for the gold sellers tomorrow. Euro is bearish and trying to make a move back to retest the lows. And the FDAX is bullish inside a multi-day flag pattern. But the holiday breakout is giving both sides of the market big opportunities tomorrow. Got a great plan here for you guys. Low volume move on the FDAX here over the holiday weekend. Got a great newsletter in store for you guys and gals tonight. Plenty of reliable trading opportunities setting up for tomorrow. Before we jump into those charts though, I do want to wish you all a very happy new year. Hope you guys had a great holiday break. Hope you're rested, refocused, and refreshed and ready to get back at it here for the year 2017. We got some great opportunities coming down the line here. But of course, before we jump into our charts though and kick off the first newsletter of the new year, I do want to remind you the only place to watch the full-length version of this video is on our blog at sidewaysmarkets.com. If you're watching the video right now on our YouTube channel, not to worry, there's a link in the description of that YouTube video. Follow that link. Come over here to the blog at Sideways Markets and watch the full-length version. While you're here, don't forget to join the mailing list. I'll send you an email every evening when our nightly newsletter goes live. Below the video tonight, you'll see a spot to download all the charts on tonight's video. Don't forget to grab a copy of those charts by following that link right below tonight's video. In the upper right-hand corner, please don't forget to grab your free pass. If you're not a member here at School of Trade, join me in the trade room as a guest. You're going to learn more with me in 90 minutes as a guest in our trade than you will anywhere else on the interwebs. Grab your free pass in the upper right-hand corner. And please don't forget, if you're brand new here to SOT, we get a great frequently asked questions page, and I'm always standing by to answer all your questions 24/7, 365. Use that frequently asked questions button and use the live support button on the right-hand side of the website. Again, hope you guys had a great holiday break. Feels good to be back here with you guys. Let's jump right in here. Tomorrow, of course, is Wednesday the 4th. Let's take a look at what we have here tomorrow for a Wednesday session. Now, of course, Monday was a holiday, right? So a lot of the major news in the U.S. session have been pushed later in the week, right? We're clearing through Tuesday's session here today. Tomorrow, of course, being Wednesday, January the 4th. Let's see what we have here tonight. We got some news coming out of Japan. We got the manufacturing index coming out of Asia tonight at 7:30 p.m. Eastern time. I'm not expecting that to be a big market mover for tomorrow, but please be aware there is a Red Star news event just a few moments away at 7:30 p.m. Eastern time from our good friends in Japan. Going into tomorrow's session, though, we have a slew of news coming out tomorrow morning in the London session, as you can see. We're going to hear from France, Germany, the EU. We'll hear from Great Britain. We'll hear from the Italians tomorrow morning. Get a bunch of Red Star news, 3:50, 3:55, 4 o'clock, 5 o'clock, 5 o'clock. Going to be a peppering of major news events coming out tomorrow morning in the overnight London session. If you're with me tomorrow morning in the trade room, we open up every morning at 8 o'clock Eastern time. We don't have a lot tomorrow morning to work with. We've got the ADP employment report, which is a minor news report. I'm not going to worry about that. That will lead into Friday's non-farm payroll number, but I'm not going to worry about that report tomorrow. What I will be more worried about, though, is tomorrow afternoon's FOMC meeting minutes, which are bound to mean an early end to tomorrow morning's session. So looking at the news here for tonight, we have the news from Japan at 7:30 p.m. Eastern time. We have that just peppering of news tomorrow morning between about 4 a.m. and 5 a.m. So keep your head on a swivel tomorrow if you're in the London session. And of course, again, if you're with us tomorrow in the trade room, we open up at 8 o'clock Eastern time. We've got minor news at 8:15. I'm not going to worry too much about that, but I am going to expect an early close to the morning session tomorrow as the market waits to hear what the FOMC meeting minutes are going to look like at 2 p.m. Eastern time. After 11 a.m. tomorrow morning, watch that volume. Whenever we have big news in the afternoon session, we oftentimes see traders head out to lunch early, and that will mean lower volume. We've had a very, very busy week here so far, though. Lots of action today in the first session of the new year, and we are expecting to see a lot more opportunities setting up for tomorrow. We'll talk about the news tomorrow night in tomorrow night's newsletter. And of course, as I said earlier, all eyes are quickly shifting now, right, to a big report coming from the non-farm payroll number on Friday morning at 8:30. We'll talk more about that as we go. First week of the new month, the first Friday, right, of a new month, of course, is going to be non-farm Friday. So heads up on that. Lots of news in the London session tomorrow. Not much in the U.S. morning session, but that afternoon session news tomorrow is likely going to get that volume to dry up a little bit earlier than normal as we go into lunch. And again, we'll start shifting our focus to that Friday's non-farm payroll report as we get later on in the week. Also, one last reminder here, it is a Wednesday tomorrow, but we do not have the inventory report. I want to make sure to remind you guys about that. With the holiday on Monday, the inventory report's been pushed back to 11 a.m. Eastern time on Thursday. So no need to worry about the inventory report tomorrow. Whenever Monday is a holiday, we know the news for crude oil traders at least will get pushed back 24 hours. So look for the API report due out Tuesday evening at 4:30 p.m. and then look for the Wednesday inventory report, right, to be pushed back, right, until Thursday morning at 11 a.m. Again, we know what the news looks like for tomorrow. Inventory report's been pushed back 24 hours, and we'll look forward to trading with you guys tomorrow in real time in our trade room. Let's jump right in. We got a great plan here for you guys tomorrow. Big opportunities setting up here. How about crude? Now, the bulls started strong this morning after we saw headlines of a production cut in Kuwait in the pre-market. But as you can see, the bulls lost control towards the end of the morning as price collapsed off its highs. The sellers now have control, and the spike in channel tells me to look for selling opportunities up at the correction zone overhead, or I need to see a lot of strength going lower in order to have confidence that sellers have interest in selling low for a move down to that big round number at $50 a barrel. We may be talking about $50 a barrel here by the end of the week this week. I think a lot of it has to do with what's coming later on this week on the inventory report, again, which is going to be Thursday morning at 11 a.m. Eastern time. Buyers, of course, started the session off with a very strong move that turned into a spike and range. We spent the morning here, most of the morning, buying the low of that trading range. Had a great session with all of our students before the market, of course, collapsed lower, and we found selling opportunities selling back down as the market collapsed off the highs. We don't see this very often, a full-blown trend reversal, right? A full rotation off that high, and then you can see the market screaming lower here with a bear spike and channel. Now, that bear spike and channel definitely tells me the sellers have control right now. However, as you can see, we've already broken and retested that low, which means the sellers have achieved at least their short-term objective. As it stands right now, I want to be a seller. I'm looking to sell either up around these resistance areas overhead or get this market to roll over with strength and show me an opportunity here, right, to sell as the price goes lower. The most reliable trading opportunities whenever I have a spike in channel will always come up at these areas of resistance overhead. So really, I'm keeping an eye on this area here between 53.09 and 53.73. What would really be a reliable trade here would be to see a buyer failure, right? Buyer failure, break down, and then look for that sell, right? Coming right back down again. Look for those buyers to fail after a correction, and then look for those sellers to get back below that moving average and hold a pullback for a move back down to that low. Now, with that said, with that move higher, the buyers may get a shot here, right, to grab control, but you just got to be careful buying those pullbacks right now, because whenever you look left and you see this much strength in one direction, you know there are going to be sellers waiting above all of these prior swings, just waiting to get this price back down to retest that low. So sellers will undoubtedly be selling into this move going higher. If you're a buyer right now trying to call a bottom, your best opportunity right now is going to be to wait for the buyers to take control and then look for that second pullback, right, to be the buyer on the way up into that correction zone. The first pullback is going to be a little bit too aggressive. You're not bullish yet, in other words. We want to really wait patiently to see this bear market turn bullish. The second one will be the one, if you do choose to go against this long-term trend, the second one will be the one that you really want to sink your teeth into. And again, be very careful selling into this correction zone, because the correction zone is definitely where you're going to see the most amount of sellers waiting to participate. So as the price goes up, looking for buyer failures to sell it back down, buyer failures to sell it back down. Really, unless we get a ton of strength here for the buyers and then can hold a pullback above that correction zone, we have to assume anything that rises higher here is going to be seen as a selling opportunity. So buyers either get to it quickly here, or you've got to get through that correction zone and then make sure you can hold on to that move right through that correction zone, and then we can start thinking about, right, being a more aggressive buyer to possibly go back and retest that range that we came from earlier on. What if price doesn't correct higher? What if it just rolls over and goes lower? This is where we have to be careful. I always like to make sure that if I'm going to sell low, I'm doing it on strength. Now, my definition of strength in this case is going to be a very strong move lower, so I can hold that pullback, combine that moving average along with that 52.11, right, the low from today, get that strong push lower, hold that pullback below, right, that 52.11, and that will give you the green light that you have enough strength. What I don't want to do is fall victim to try to selling something like this, right, where it tries to go lower, but we're just not getting enough strength to the downside, and I end up getting caught in a short covering rally, right? This is always going to be a very aggressive way to sell because we're just not getting enough strength. If we see this thing really push through, that's the strength that you need to want to keep selling low. You know, think of it this way. Everybody's already in this market. Looking at the market right now, looking left, you can easily see there's no doubt in my mind that everyone, unless you had your eyes closed today, everyone should already be looking short. When everyone's looking short, we need to either get a correction to entice more sellers into the market, because we aren't going to be able to attract more sellers here. We're going to have to get this price rising higher in order to attract more bears into the market once again. It's either that, or they have to prove it to us that these sellers really mean business, and that's where I'm talking about we got to get that strength, right? I don't want to see them just dip their toe in the water below 52.11. I want to see these sellers show me proof with a very strong push through that low. How strong? Strong enough to get that moving average below that low of day, and then I can start thinking about, right, being a seller. Once we get there, we'll look for more information as far as short-term targets go, but we have to assume right now long-term targets are going to be seen down at that $50 a barrel here later on this week. I think a lot of it has to do with what happens tomorrow evening with the API number, and of course Thursday morning with the inventory report, as far as whether or not we'll be able to really sink our teeth into that big round number. Bottom line, as it goes higher, sellers are looking for failures to sell back down. Buyers got to get to it quick, or wait for that price to get above that correction zone, and you can look for a move back up to retest the high. Stick to the sell side though for those, right, for crude oil, right, until proven otherwise. Now, there doesn't appear to be much rhyme or reason to the S&P chart this evening. After starting the day with a strong bull move higher, price then followed crude oil and collapsed back to the lows, only to see the buyers re-enter the market and finish the session with strength going higher again, right? Back and forth, up and down, and then, of course, right back up again. The most important clue appears to be the buyers entering the market at the lows today, telling me that buyers rejected the higher prices earlier this morning, but were much more interested in buying the low of that range. At this point, all we really have to work with is a trading range from the low up to the high, and we know the buyers have control and will be looking for buying opportunities with a valid trigger on the next pullback to the moving average, the target going back up to retest that high. So like I said earlier, right, we had this market running higher here with crude this morning, and this is going to look a little bit, this is going to start to be kind of a broken record here in the next couple charts. It looks like everybody kind of got swept up with the crude move this morning, happening at the end of the morning, right? Buyers took it higher. They held their pullback. They made their new higher high. They didn't get anywhere near a measured move. I guess it was near the measured move, but it was definitely a hopeless attempt to achieve that measured